All right, I'm going to get things started. All right. What's up, everybody? Happy Friday. Happy Friday. Good to see you all. Hope you had a good week. This is a little bit of a slow week, I got to admit, but Friday was good. Trading was good here today. Finally got the setup I was looking for. I'm going to look at that here in a bit. To start out with, what's up, Stone Pilot? Start out with what I want to do is go through some of the trades for the week, some of the positions, because what I'm noticing is that people tend to come join as the live stream keeps going on into the hour, and so I don't want people to miss some of the things I think are important to look at. So again, if you are joining the live stream late, thanks, Jen. I got you. Or if you're catching this later, we do this every Friday, 4 p.m. I want people to come and join because I like to be interactive. I like to talk to people. We stream it on YouTube TradingView and on Discord, which is totally free. I just want people to come hang out and share ideas. I'm day trading there every day and sharing what I'm looking at and what I'm taking. So that's the plug according to Jen, and that one is out of the way. So let's get rid of that and bring over a TradingView window for trading. So basically here at the top of the hour, we're going to go through some of the trades I put on this week, some of the positions I'm in, and why. Because I think a lot of people are trying to figure out what to buy, and I don't think you should necessarily do what I'm doing. Hashtag disclaimer. This is for educational purposes only, but I do put a lot of thought into finding some contrarian narratives out there, because I think that's where the value truly is. Pardon me while I open up a drink. So I assume Stone Pilot, you're there. You hear me? I'm good. Sound coming through on TradingView just fine. I had some technical difficulties last week with TradingView chat, but I think we're doing pretty good on TradingView chat since I see it. So, yep, thank you. All right, well, I'll make the note to everybody. Welcome to the stream. If you have symbols to look at, call them out. And let me find my rocket emoji. Where's my rocket? There we go. There you go, TradingView. Love TradingView. Yep. Okay. All right. Thank you, Jen. Yeah. All right. So today on the ES futures was an interesting day if you're looking down here on the 1 minute. But finally, after some patience, a long week of not having a setup that I liked, we finally got something here, right here at 11:30. Now, for those that have heard me talk about before, 11:30 in the AM Eastern Time is a very, very important timing element when you're trading not just ES futures, but pretty much anything that trades out there. Yeah, we'll get to Google in just a second. And so what this essentially was on the S&P 500, if I clean this up just a little bit, let me take off my extra indicators. All right. And let's go to about 10 a.m. All right, so 10 a.m. this morning, you had an overnight trade. The S&P 500 futures, which we're looking at right now, set up a overnight low at about 3:15 a.m. and then to about the high that's set up at 8:30 right before the open, brings us to create a 50% level right here at 39.6875. And so that's going to be very, very important as time goes along. Price comes up and tests it, holds it. I don't see a setup here just yet. Do not see a setup that I like at this level. But we know that that's a good level, not only because it's a 50% level, but also because price does this little inflection right here. And so this is the kind of stuff that I look at when I'm day trading. So you want to look for price to kind of respect a level, and that makes it even more powerful, especially if it's at a 50% of a major trend. And so I'm waiting, and here we have right at 11:30. 11:30 is when the European session goes offline. They shut down, and you can very often find reversals in price. Now, right here, you have one of the things I really like, which is a little spike. Didn't quite trigger my indicator, but this right here is a little shakeout. A bunch of people bought it up, closed their positions, did whatever. That's key. At the same exact time, you also had this happening on the NASDAQ. And I know that if I want to short one of the futures, I want to go for the NQ futures. Little hint, right now, the S&P 500 futures, for whatever reason, well, the components basically, are more bullish than the NASDAQ. Tech is still getting a little depressed, and if you want to take a bullish day trade, you probably want to take it in the ES or MES if you're on the micros. And if you want to take a bearish trade, you're usually better off on the NASDAQ. And we can go into that a little bit in a second. But so right at 11:30, we get that ping up. I'm sitting here with bad bad fees, and we're both looking at it, and it comes up, spikes, got an entry right here. I'm looking for it to come back down to this low right here. Now, why do I pick this level? I picked this level because you have big sell-off here that ends right there, like at the bottom of that bar, the very bottom of that bar. And then you have inside this box right here, the first real reaction before this reversal. That's what I like to see, like this boom, 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 makes a little pivot and pulls back to a 50% right there. 50% is how I do everything. And so even a 50% of a little small reaction like there can create a little point of reversal. Could even take a trade there, but I didn't. But that becomes a support that you have to watch for. And as price goes along, patience, 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 pays off, finally breaks down, and pings that level. Close out my first contract. And then leave a runner on for the rest of the day. I was hoping for more. Instead, it seemed to come down to this level, basically this little inflection point from Thursday, pegged it, and, well, that was about all we got. Closed it out before we had this little rally, and that made up for the loss I took on Wednesday afternoon and ended up having a good week. So little things like that I hope are helpful to people to point out. These are just things I observed going through many, many charts, looking at these things day by day, day by day. All right, since we got the question, let's take a look at Google. Now, Google is a stock that I still own as a long-term hold, but the opportunity to trade Google based on a 50% retracement level, as I've been looking all through 2022 from the COVID low up until the all-time high, did a little spike up there, it has given it up. Just like I trade a 50% on 1 minute time frame, I also look for it on a higher time frame to define the trend. And so I don't have a large trading position on here. I've already closed it out. Earlier in the year, around March or April, I had a thesis that this was going to be a pullback of Google, and I wanted it. But when it broke this level here, that's when I got out in the summertime. And I'm glad that I did. Now looking at it again, thank you for having me look at it, Julie. The reason I want to get out when something breaks a major support, something defies what I think it's going to do, and the reason I don't like Google now is because it has broken down below this 100 level. There was a split. There was a stock split earlier and this year, and I was basing my thesis that in years past, well, in the bullish years of 2020 and 2021, when there was a stock split, like on Tesla and Apple, it led to a rise in price. Well, Amazon and Google both split this year, and we didn't see that kind of rally. So my thesis was incorrect, and we're breaking down from multiple levels. I don't want it anymore. I don't want to continue being wrong. Now, Google, is it a company that's going to go away? Absolutely not. So for the long term, Google is a good company to have. I mean, I've got a Google phone. I'm never going to replace it. I'm not going to get an iPhone. I search with Google for most things, although admittedly, I've started using DuckDuckGo a lot more. I kind of seem to trust them to be a little less biased, honestly, about certain topics. But from a technical standpoint, breaking this key 100 level right here, this 50% level right here, that's not good. And it's come back here to already test it from the top side once. You basically have it come down, set up a support, break below it, and then hold right here. You broke a little bit lower, looks like it was on earnings, and it's holding right here. If I was in this and I had seen it break this 50% and it had pulled back, I would be looking to try to protect myself. Because what you don't want is you don't want it to hold and then go down again. Let me bring up an example. So this is an example that I use, nope, not the FTSE. Zillow is an example. I've already got it noted up, but let's take it off just to show what I'm talking about here. So Zillow was a company that I used. I love the company. I used it for my rental, and it's great for browsing properties. And if you recall, back in 2020, 2021, they were trying to algorithmically buy up property in the real estate market. Well, they came back down to a level in May of 2021, right here at 114, started holding it. This is the weekly, by the way, on Zillow. Came back up to test it, held that test, and then came back down again, just hanging out, hanging out, hanging out. And then finally, you get a solid break. You get a break of the range, the low that it established right at this level. At this point, you really need to protect yourself because you don't know where this is going to go. This is before they announced that write down of all their losses. So you really had to be out before that happened, because right here, we're going to get that announcement. Boom. You really had no chance. This whole gap happened within a single day right here. Boom. You had no chance to get out. And if you still continued hodling, thinking, oh, how lower can it go? Well, we're just now getting into 2022 here, and it has not gotten better. If I recall correctly, Facebook was another example of this, where Meta also got down to a level where, it broke. I remember when Facebook had those really abysmal earnings. I think it was either that or it was when Apple announced that they were going to stop letting Facebook track their users, thus really hurting their advertising revenue. This was around this earnings right here. And I remember when this earnings happened, I remember the reason I didn't buy Facebook, even though everyone else seemed to be doing it. Everyone had the mindset, it can't possibly go lower. Well, oh well. It opened below this 50% level from the COVID low to the all-time high. Okay, so you're just holding 200 shares over the weekend. Okay, well, if you're just in it now, in Google, just bear in mind where that 100 level is, and just know that you really needs to close above that. Okay, Google, stop. Lulz. For a day trade, it's totally different, but you need to be aware that Google is in a bearish trend. So try to take some profits on that. I can't say the G word anymore. All right, so Facebook is an example of where when you had that earnings price not only open below it, but that day closed below it as well. And so I remember everyone on Twitter, everyone on my social media was talking about how Facebook can't possibly go lower. I mean, the contrarian in me really, really honed in on that. And as it kept on getting lower, a lot of people thought they were getting a great deal on Facebook, but man, it just kept on going down. You had a chance for recovery, but you did not recover that key 50% level right there. And wow, this is one of the things why you can't just hold on to losers. I mean, this year has been an education for everyone. Wow. Yeah, break that low from COVID. Yikes. I mean, you can't don't ever ask that question, how much lower can it go? Here's your answer. I hope that people that have been really following the markets and trading this year take some of these lessons to heart. That, you get so used to the years of 2020 and 2021, or even the decade before that, where things just go up. It's very forgiving about losses. And you end up with a situation like this where you just kind of get into I call it the valley of risk. Basically, you don't know where it's going to stop. And so if you just keep on holding, I guarantee you anything you do is going to be wrong, because you're going to do it out of maximum pain, which if you're feeling maximum pain and sell out at max pain, that's probably what the market is doing, and you're going to sell the bottom. Or if you hold on to it because you still have hope, it's just going to keep grinding you down. So as a trader, I try to avoid those fallacies as much as I can. Amazon was another one, that I was talking about, where, you basically had, basically in the spring of this year, came up, held, and then broke down again. I think that the 50% retracement of the COVID low was here, all the way up to here. And then I was really proud of myself that I was able to catch it on this day. I actually was fortunate to get a swing trade where I bought it. I remember I missed this one. I missed the one in January, but then come March, I grabbed it there on the bottom, and then we got that little March uptrend that I thought was going to be, a really good pullback to retest the high. Took some profit, fortunately, and then I held on to this all the way till it came back down. Got out back on this run up, and I'm not in Amazon in my trading account anymore, and I'm glad I'm not. Because this market just keeps grinding down, grinding down. What is the ES doing right now? Well, again, 50% retracement levels. It's so cool that from the COVID low to the all-time high, that's exactly what we came down and pegged. The SPY index did that pretty closely. Actually, I think it hit it properly. Yeah, it hit that properly, 349.12. And incidentally, right on that day that it hit it was also the October CPI print, which set up one of my favorite indicators, a spike, a price volatility spike that shot down, closed back inside the range, and the market is still pushing up off of that volatile spike. I have to assume, even though I took a short trade today, that the market is slowly trying to push up to probably retest about 4,200. And then from there, we'll just kind of have to see what happens. But that's my operating assumption right now when it comes to equities. So, and by the way, if you guys have any questions or if I go too fast, feel free to ask. Just drop it in the chat. I like talking to people. I like teaching. I don't want to charge people for teaching. I did a little Tuesday webinar with a local group this week. Hope they got something out of it. Yeah, so if you guys got anything to look at, let me know. One thing that I've been talking to people about this week, let's kind of foray into crypto, and we'll transition this way. One of the key things that I've been watching is looking at the correlation. And those that have been following crypto for, and stocks, they should know that crypto and stocks have been highly correlated for 2022. It's because interest rate decisions by the Fed have driven the sentiment of both. So all the way back here on, if I remember it correctly, was December the 3rd. So December the 3rd right here. December the 3rd was a jobs report at 8:30 in the morning. It was a Friday. And I remember that very clearly because on that December 3rd, where are we? There we go. This is what happened. This happened in Bitcoin, and this happened in Ethereum. It happened in all of the things. Let's bring up the correlation coefficient for SPY since I'm looking at Bitcoin now. Actually, let's do ES. So we have the full 24-hour experience. Okay. And there had been some correlations here, but what I found was so fascinating was that Bitcoin crashed on a U.S. jobs report. Now, what does Bitcoin have to do with that? Well, nothing. It really should have nothing to do with it. But let me pull up my ideas from back then. It should have had nothing to do with it, but it has everything to do with it because what people didn't want to acknowledge, I think a lot of people in crypto believed, they drank the Kool-Aid, that crypto's bullishness throughout 2020, 21 was somehow inherently the responsibility of crypto being a superior financial asset. Had nothing to do with it being tied to the existing financial system. And that's just not true. A lot of borrowed money, a lot of low interest rate cash, debt had been pumped into cryptocurrency. Let's go to that December 3rd. And I tried to sound the alarm to as many people as I could that, look, interest rates are starting to affect crypto. Yeah, so this was where I was talking about the liquidation based on the jobs report. And really getting past that low, because I do everything based on spikes. When you see a volatile spike in price, that tells you where the sellers and the buyers had the battle. And in the moment that you look at it, you see that the buyers won. Yeah, we'll take a look at Kroger here in a bit. And if you ever break that spike, that can trigger a breakout. And that's one of the things that I predicate my trading on is price should hold the bottom or the top of that spike. And you can count on it to be a reversal until that happens. And that way you know where your stop needs to be. And so that really defined the price action for Ethereum and Bitcoin. You don't want it to break that December 3rd low. But what's happening is people that are investing their borrowed money, borrowed cash, borrowed dollars into cryptocurrency, you're looking at, okay, wait a minute, the party's about to be over. There's not going to be as much money pumping into cryptocurrency as before. And so when you broke that level around January, around 3,200 Ethereum, you got to cut your losses. You got to take that profit from the year. But nobody wanted to listen. Nobody wanted to listen. And as time went along, let me go and find the next one I wanted to look at today. I can't remember exactly which post I started talking about interest rates being, here we go. This is me getting frustrated at people not listening to me when I talk about how TradFi is directly influencing cryptocurrency. We had I believe it's a FOMC back in December, which was after this jobs report, where they probably said something to the tune of what they were going to do about interest rates. And the price action was exactly the same across the S&P, the NASDAQ, Bitcoin, and Ethereum. That's uncanny. That shouldn't happen, but it did. And so you knew then that interest rates or the rising of rates or the Fed's decisions were going to impact cryptocurrency all the way back in December a year ago. But the party was still going and no one wanted to acknowledge it. And then finally, one of the interesting things that came about for me looking at this post-FOMC meeting from December the 16th, 2021, almost a year ago, was the relative strength of various cryptocurrencies. And this right here, a 30-minute chart for Ethereum in the top left, Bitcoin in the top right, Monero in the bottom left, and Doge on the bottom right, was really telling about the future. Ethereum held and kind of held up at the range. Bitcoin recovered, but the true winner, the most bullish recovery of this FOMC meeting, this fundamental event, was actually Monero. And that's when I started to take notice of Monero and its performance a year ago. And I started talking about it to people like, hey, you guys need to really pay attention because, in spite of everything that's going on, Monero seems to be more bullish. Now, what is Monero? Monero is a privacy coin that's been around since 2014. It's a privacy by default coin, whereas Bitcoin is semi-anonymous in that you can do all kinds of tracking. Can't know exactly who has the coins, but you know where they're moving and you can trace them back. Recently, there was the biggest bust. I think I talked about it last week. So largest crypto bust, Gainesville, Georgia. Yeah. So this happened about 2 weeks ago, November the 7th, where they seized $3.36 billion in cryptocurrency, about 50,000 Bitcoin. It's probably not 3.36 billion, but 50,000 Bitcoin from someone that had stolen it from Silk Road. I don't know who it actually belongs to now, but they're going to sell it. And, it got me to thinking, hackers are paying attention to this. Like, you can not get away with your illicit transactions with Bitcoin. They can track you down. There's a whole industry of people that do chain analysis on this. I think that people are going to start looking to privacy coins more and more. And so as a store of value, not only in the price chart, but also from a fundamental thesis, that's what I've been starting to see. And so One of the posts that I made this week was about Monero, and I'll go back to that December the 16th was right about here. This is the idea that I put out this week. This is Monero versus Bitcoin, or XMR slash BTC. Monero has outperformed. You can look at this cross right here. It's up. XMR slash BTC is up almost 100%. I think it just made a new high today, actually. So yeah, it's busted past the year's high, and Monero, even though it's down about 30% from a year ago. Bitcoin is down over 60%. You have how would you say that? Half as much loss or twice as much performance in Monero as a unit, as a store of value. Now, Monero, like everything else in crypto, has been going down. It's down 30% this year, but that's compared to Bitcoin, which is down, of course, since December of 2021, almost. What are we today? Roughly about 65%. So your crypto would have held more value in Monero than Bitcoin. But don't tell the maxis that. Don't tell the Bitcoin maxis that. They don't want to hear that. They don't want to hear anything other than the one true cryptocurrency. But if you follow any sound financial advice, diversification is key, isn't it? And I'll tell you something. They're on the web, where the lights are off. There are two currencies that they take. They take Bitcoin, which transaction fees are very, very high, and Monero, where transaction fees are very low. It is actually being used, even in this bear market, in rather recession-proof industries. So I think people need to take that into account. But as a little follow-up, since I didn't finish my segue, Bitcoin, again, we're looking at Bitcoin right here, right now. Below us is the correlation coefficient between that and the S&P 500. For most of 2022, because they're both influenced by interest rates, the correlation coefficient has oftentimes been very, very close to 1. In other words, they've been exactly correlated, the downs and the ups. Very recently, last week, I noted it on this FTX news, the correlation has broken. And while crypto has stayed down, equities, the stock market, has been going up. Now, correlations are broken here and there, but one of the things I've been trying to do to my really, really good friends that are really big crypto bulls is try to impress upon them the continued value of TradFi. And TradFi is they identify anything that is not crypto, anything that is not digital, anything that is not decentralized. But I'll tell you something, boomers, which is still the largest generation up to this point, most of them have died now, but the largest generation, the wealthiest generation we have, they don't know anything about crypto. They have a lot of stocks and bonds. That market is not going to go away for the near future, 10, 20 years. And they're going to be very heavily reliant on that. Now, there's going to be equity outflows, but that's a whole separate discussion. What I encourage people to do is diversify. While we're down in equities, down in crypto, down in everything, into ideas of value that are related to companies that produce goods and services. That's how wealth is created. Just hodling a digital asset, hoping that it goes back up, that doesn't create any value. It doesn't actually create value. You're just expecting someone to buy it from you later at a higher price. Whereas if you have stocks, you are, in essence, owning the future profits of this company who is producing things that people want. It's really just very simple to me. Like, what in the last year, seeing crypto go up and down and it all kind of evaporate. I I mean, the concepts of like distributed finance, the concepts of having, internet money that's uncensorable, these are all real. These are all really good use cases. They're not going to go away. I'm not saying that any of this stuff is dead, but it's not the world. It's not everything. There's still reality out there. Companies that produce widgets or give services, they're the ones that actually have money that moves, and that's what creates wealth. And so you really have to consider that and be a part of it and not completely reject it all. But I hope people listen to me. I mean, it's just my opinion. I'm trying to help people out. But ultimately, you have to make your own decisions. And if you think I'm wrong, that's fine. But I wasn't wrong last year this time. So, all right. Thank you, William. Thank you, William. Again, I solicit for questions. Plug number 2, I do have a Discord. It's free. I don't charge. I just want to hang out with people. So find it below and come talk to me. Tell me I'm wrong there. Give me your best thesis. So I continue to be looking at Monero. That's somebody asked me this week, what crypto are you looking at? I'm not a Monero maxi, but I think this weekend I'm going to spend some time setting up a node. You can mine Monero. It's set up, the algorithm is set up in such a way that you can't use GPUs to get a major advantage over other people. You can't have industrial-sized Monero. In fact, it's not even economical to mine Monero with the electricity that goes into it and the hardware cost. It's not. You mine Monero because you believe in providing decentralization to the network. The people that mine Monero and earn some fresh Monero, they do it because they want to keep the Monero blockchain going. They're kind of doing it in an altruistic way, and I like that. Well, you say that, William, privacy coins being hit hard, because I think you're probably talking about Zcash. And do you have any others that you know in particular? I mean, Zcash has definitely been getting hit hard. I mean, Zcash is down from the summer, from June, when we had this last spike down. It's down a whole nother 34%. But what I find interesting is that even though Bitcoin lost its low, the low set in June, like Bitcoin here, basically it broke the June low, the Celsius FUD low. That's what the FTX made it break. Ethereum has not. Ethereum is still hanging out in a range. And likewise, Monero is also hanging out in a range. But I think at the end of the day, when it comes to privacy coins as a whole, people are going to pick one and use it. I don't know if you're old enough. I'm not really old enough, but there was the fight between VHS and Betamax, where our people would argue that Betamax tapes were superior to VHS, but VHS became the dominant technology. There's all kinds of different tech examples of where you have a superior product, but one gets adopted and used more, and that becomes the winner, regardless of its inherent merits. And so, yeah, like when you have Zcash, and that's the one that just comes to mind. Yeah, it's probably going down because nobody's using it. Nobody's buying stuff with it. It's not being used on these marketplaces. People don't see it as a good store of value. You got to pick the winner. Adam hasn't broken Celsius. Yeah, what's Adam doing? I know you're a big Adam bull. Sell me on Adam. Why should I care about Adam as opposed to something else? What does it do that others don't? Yeah, Adam's holding 10. Not bad. It's not shit like ETH. Because they got like lower fees. People are using it for NFTs and all that good stuff. Okay. Yeah, and Solana was another use case where they're trying to beat Ethereum. But, when it comes to a technology trying to beat something, Solana really took a hit. Oof, that's bad. I got a whole story about my friend buying Solana at 100 and me talking him out of it. I'm glad I did. Adam, I mean, I'm interested that Atom is. I mean, these are good things to be looking at right now in this market. Is like what's holding up its strength. Ethereum has not broken the June low. Atom has not. Monero has not. You know what? Let's add Atom here because that actually gets me kind of interested. Bitcoin has. Bitcoin has lost its. I don't care about cake anymore. That's for a friend of mine. That's just crazy. Nice little spike there though. And flow. Yeah, no, don't care. Take that off. Cake. I'm not holding to that. But these are the kind of things you need to look at. And you know what's interesting? Let me share something with you guys. So with this FTX fallout, I try to stay in as many Bitcoin maxi chat rooms as I can to sort of get a feel for the vibe in those rooms. And in the June low, when Celsius was crashing, man, they were still pretty damn arrogant. They were really excited to be buying the dip, really and truly. In this recent dip, silence. Silence. Fear has actually set in. And let's talk about that. This is a good old classic example. All right. Anatomy of a bubble. So, yes, let's do this. I like TradingView. Okay. Did it follow the anatomy perfectly? No. All right. We're somewhere like that. Okay. So you have the takeoff, the sell-off, which was COVID. You have the rise, the delusion, the new paradigm, and really you had, I remember, the bull trap in here. The bull trap was in here when, in the summer of 2021, you pulled back. Ah, crap, I lost it. Bull trap. So the bull trap really happened in the summer of 2021. And then you had Elon come in and buy it on Tesla's balance sheet. That was in here somewhere. So that's the return to normal. And at this point, you started having in fear. I feel like what we're probably coming to in the fact that all these, like my mom sent me a text message. Where is it? Where is it? Where's that message from my mom? My mom asked me this week. She sent me a text message on Wednesday night. Let me find it. Where is it? My mom gets almost all of her news from Fox News. I love her, but yeah, she sent me this this week. How about how Bitcoin was a scam? Because she knows that I do crypto, and so she asked me. I was like, "Mom, didn't hurt me. Here's basically what happened. Some people got greedy. They got people to invest their client money, and then they went and spent it on things and lost it. It's not Bitcoin itself that was the problem. But it's interesting how scam is starting to become the operative word. I've been telling people this since really the top, actually in the whole run up. The time you want to buy things, the time you want to buy crypto is when everyone agrees that it is dead. When everyone agrees it's the worst investment possible, when everyone agrees it's never going to come back, when everyone agrees that the government's just going to ban it, whenever it's all negative, that's the bottom. As long as people are still buying, it's just, I don't know why it is. It's just so ironic and an enigma that as long as there's hope, that thing just keeps grinding people down. But the silence, the lack of hubris, the lack of arrogance from some of the most prominent Bitcoin maxis and crypto enthusiasts, that's actually starting to become a little bit of a bullish sign. So I'm thinking, based on past cycles, past bear cycles, basically there's been 5 bear cycles, and they've ranged from a drawdown of 75% from the high all the way down. So 75% was basically what we hit in June. That was the minimum you could have expected from the drawdown based upon the history of Bitcoin going back to 2009, basically, going back all the way to the 20s when I first got in. Yeah, we can't. Can we zoom in that far? Yeah, it was even before that. Got to bring up the. Hold on. Let's just take a little look back in time using the Bitcoin all-time history index. Let me take off my indicators and we'll just look at price. And yes, so this was my first experience in Bitcoin right here. This was my first experience. Was I bought my first Bitcoin with a $20 bill, and I saw it go all the way down to $1.96 or $1.94, I think it was. So yeah, magic internet money. What an idiot I was. And that drawdown, by the way, and yes, it is relevant. I don't want anyone to say that, oh, well, this time it's different. It's different because of more mainstream adoption. No. Where's my info line? Info line, yeah. So that was a drawdown of 93%. The next big move down was in 2013. I believe this was the Mt. Gox incident. That was 75%. That's that minimum. And then you had the next cycle down, which was 86%. So now you have kind of a top end range. And then in 2017, you have a drawdown of 83%. And so 75% was the minimum we could expect. And we got that in June. So the range for a Bitcoin bear market is 75 to roughly about 85%. And so what 85% would put us at from the all-time high is about 10K. And I really like that level as a price action level, because what it does is it brings you back to the starting point of COVID, where you had the COVID low, you had the first initial signs of breaking out, comes back and retests this support here around 9,900 and launched up. I don't know if it's going to get there. And like I said, I'm already psychologically starting to see signs of it, that fear and possibly desperation are starting to set in. But I think it's very important that people pay attention to not only price, but also the mentality out there. Now, when there is a bottom proper, it's going to be very, very hard for even you, even me, to buy it, because everyone's going to agree that it's the worst investment possible. But try to see through that. Try to have a different contrarian opinion, because that's where the wealth is really made. And what may end up happening is, in the despair, the price actually pushes down below whatever lines I may draw up. But then you will eventually have the return to the mean. And I'm sure I'm not going to bring up those rainbow charts and things like that, but what is the mean of Bitcoin? Well, you can just simply do a drawing. Forget everyone else is trying to see, let's intersect it there. Yeah, so the real value over time of Bitcoin, it does go up because there's ever increasingly less and people are printing more dollars. It's a fixed supply, but if you're like me and you lost a bunch of dead hard drive, there's less Bitcoin out there. And so generally speaking, I'm not going to throw out numbers here, but we'll probably have some kind of a dip and then we'll return. And that's probably what it's going to look like when it actually starts to bottom out. Now, be careful, because I traded and watched the events of the last cycle, and the thing that really got people was November of 2018, where price was hesitating, just like it did this last summer, and then price had to fall another 50% to really get people out of Bitcoin, to really make people lose interest. And then you bottomed out. But even though you had a rally, a FOMO rally, if you would, up until this point right here, where you bottomed out $3,500 Bitcoin, had this rise where everyone thought, okay, the trend's starting again. Well, you still ended up having another year into the COVID low, a major economic event that brought it all the way right back down to where people thought that they had missed the bottom. So my whole message all the way from last year till here is to people that you don't have to chase it. I remember everyone was telling me that they had to buy Bitcoin because it was going to replace the dollar and the Fed was going to put it on their balance sheet as the reserve currency of the world and all other kinds of bullshit. My experience with Bitcoin is nothing close to that. My experience with Bitcoin is there's no reason to rush into it. And what I told people there at 60K when they couldn't understand why I wouldn't buy it at 60K is very simple. Because no matter what price that Bitcoin rockets up to, if it had gone from 64K up to 300K, if it had done that, if it had gone from 60K up to 300K, it still, at some point, would have pulled back 75 to 85%. And so I knew when people were telling me that Bitcoin was going to go up to 600K, or 300K, sorry, 300K was what everyone was saying. I knew that I was going to be able to buy it back for, I was going to be able to buy it back at 60K or 75K at some point. Eventually, this run was going to have a huge crash, and I'd be able to buy it at whatever price you're looking at here after people are super excited about it. So I wasn't in any kind of rush. I didn't think I was going to miss it. And the same thing applies as we come to a bottom on Bitcoin. I'm not really going to be that much of a rush to catch it because it's probably going to come back and test it more than once. So I hope that helps people to share, what I've seen in the past, studying not just Bitcoin, but other bubbles as well. You really just can't buy the narrative that people are telling you. You have to do your own assumption. Don't even listen to me. Come up with your own, but be careful where you get your information from and the kind of people that you do. And also watch for Michael Saylor to get liquidated because I think that has to happen. All right. Coming up to the last couple of the stream. Might go a little bit longer if you guys keep me talking. So post some things in the chat if you want me to talk about anything in particular. All right, let's take a look at chat. Stone Pilot, I think $70 to $65 is going to be a good entry point on Monero. At least that's my expectation. Fair enough. I'm a trader, and I really hate this whole philosophy. I hate dollar cost averaging, but I have been doing it on Monero. It's because you really don't have a price action based on the trend because it already broke it at 272. And so right now, I don't really have a technical trading level to go on. So lacking any sort of trading strategy, if I'm buying any kind of cryptocurrency, I'm trying to buy Monero. And I see Monero as a really good investment because it is legitimately outside of the TradFi system because it is anonymous. And so the money you put into it, it's different. It's just different. So let's take a look at Link for trading official. Link USDT perp. Thank you for giving me the full symbol. All right. So looks pretty standard to cryptocurrency. It also has not broken the low that it set back in June when there was so much FUD. That's actually kind of interesting. It's really interesting that you have a lot of these currencies holding their lows they set in June. They haven't broken it. Monero, Ethereum, Atom, whereas Zcash, Solana, they all have, and Bitcoin. I'm kind of amiable to the theory that the reason that Bitcoin broke its level is because of lots of margin positions pushing it down, a lot of forced liquidations, and whereas the others that are frankly a lot less useful, they just no one's buying them. But time remains to be seen. We shall see. I know a lot of people, a lot of hardcore people are still aping into crypto now. I think basically you got to wait until people are no longer admitting that they're buying crypto. What does that say about me buying Monero? Anyway, it's got to hold that low, man. Trading official. I mean, I don't use any fancy indicators other than just price action and trend analysis. You're caught in a range here. And I'll tell you something, price abhors a range. It really does not like to stay inside of a trading range. So you need to be very careful, because if it breaks the upside, well, you're in good shape if you own it. But if it breaks the downside, it's going to go quick. And the same goes with everything else. Now, Bitcoin, it's broken the range, but it's not really breaking, which is strengthening. It's showing some strength. But generally, when you break a range like this, where prices consolidated a very long time, it's usually very violent. And so I think you do have a lot of people trying to accumulate Bitcoin down here. They're trying to buy this dip. But, I mean, the way I look at it is very simple. We broke that June low, and we closed below it, and we've held below it probably this week and last week. You got all the confirmation that that's even below the 2017 high. Isn't that crazy? People were buying it up because, it was breaking that all-time high. Actually, what's funny, what's funny? Someone told me this not too long ago, that Bitcoin has never closed back below a past all-time high after breaking it. Well, that's not true anymore. That's one of those little adages that people tell themselves to justify YOLOing into something, FOMOing into it, YOLOing into it. And it's just a big fallacy in trading and investing. Yeah. Because, I mean, the all-time high here on Bitcoin was 19,000. And I think they were talking about the monthly. Yeah, the monthly had never closed below it. Okay, fair enough. Monthly had not. So June, the closing price there was 19,944. Okay, good. And then July, June also, but then you had September, which did. This is how powerful closing prices can be in analysis. In September, you violated that adage that I heard throughout the bull run and through the June crash, was that Bitcoin monthly, that's what it was, monthly, has never closed below a past all-time high. Well, September you did, and here we are in November with the FTX collapse. Didn't know the FTX was going to collapse, but price told you that something you thought was true just wasn't so. Gets us in trouble. Where's that quote? By old Mark Twain. Yeah. What gets us into trouble is not what we don't know, it's what we know for sure that just ain't so. So it is not so. It was not so that Bitcoin would never close below its last all-time high. See, November, we got a few more weeks in November. Who knows? We got Thanksgiving coming up. Oh, yeah, that brings me to something. Thanksgiving, Friday, probably not going to have a stream that day. In fact, no, I'm not. So, any questions you got for me on this stream, put them in the chat now. Oh, yeah, Jen. Okay, I got you. Jen wants me to talk about Kroger. Kroger is something I do own. I shop at Kroger. I give them a lot of money. And like lots of things, I give a lot of money. I'd like to be invested in it. What a crazy zany chart. I made a pretty significant trade / long-term investment back in October of 2021. And I remember very specifically how, hang on. So back in 2021, let me see if I can remember what I was doing. I think that there was an earnings. Yeah, okay. So there was this earnings here in December 2020, because I know that we were hanging out. So, Johan B., what do you mean there is? I had my Discord way back in December, and we were talking about Kroger, and I remember we had the earnings on December the 20th, and it popped down, and I had this gut feeling. I was like, you know what? I need to buy some Kroger. I need to buy Kroger, here on this dip. It's come down to a support level, where prices hold up. Man, what a volatile chart on this stock. But I didn't. And then we had this huge, big run up in January 2021. That was in the whole meme stock phenomenon. I was like, facepalm. But I was patient, patient, patient. Can we go back to this? Oh, William said, I think they're also a CME gap. What do you mean the CME gap on the futures of Bitcoin, the CME futures? So I think this was a standard 30-minute spike trade. Yes, it was. Yes, right here on October the 28th. Boom. Captured this. It probably was more up to there. And so was able to, capture, and then they had that counter spike. Took some profit, which, you always wish that you had more. And so, I was able to grab Kroger from a trading perspective and then convert it into a long-term position because it never came back to that stop level of 39.15. And so it's been kind of a wild ride. I've been selling some calls against it and, earning a little bit of premium on them. It's come all the way back close to it this year. But man, what a wild ride this year is. But I mean, really and truly, Kroger keeps on acquiring more stores. They're doing a lot of online ordering. People are always going to need to buy food. And I frankly like Kroger better than Publix. They send me coupons every week, and that's really effective at getting me to continue to shop there. So I really think Kroger is a really good investment. And I say that talking my own book. Hashtag disclaimer, this is not financial advice, but I rather like the stock. Let me do a recap of the stocks that I am looking, because I'm always looking for opportunities, especially as we keep grinding down on the market with stocks. People ask me, is now the time to buy? And I give the same kind of tongue-in-cheek answer. It's a better time to buy now than a year ago. It's true, but it's also being a little bit of a dick. But yeah, it's true. What I've been looking at is the same thing I look at in any kind of chart. United Healthcare. United Healthcare did a pullback. I've held this company for a long time, but we also got another pullback here on earnings, which was a 50% level at 500. Came up to the top right here, grabbed some profit, came all the way back, didn't stop out, held that level once again at 500 just this week. Made me a little nervous. I didn't want to give up my UNH because I want to have this company for years, decades, because look, boomers, as I was saying, huge demographic. They're getting really old. They're going to want to stay alive. Healthcare seems to me to be the most obvious sector going into the next 10 to 20 years. BMY is another one that has been going up. Grabbed a BMY position back in August. Again, 50% pullback from the November low to the high in June. Boom, that's where I started that position back in August. So BMY has been doing pretty well. What is another healthcare stock or pharmaceutical? Merck. I'm not in Merck, but people have been talking. Yeah, Merck is just ripping. I wish I was in this, but I'm not. Humana. Yeah, Humana is one that I do have some long-term on. It just keeps going up. Look for pullbacks in healthcare on the long term. Hopefully you get them. But yeah, healthcare. Union Pacific. This had an earnings dip on October, and that was a very nice pullback to a COVID low to all-time high, 50% level, right around 192. You had it spike out, basically create you a bottom, tell you where your stop needs to be. And so I've been holding on to this through this recent rally, and we're going to see if we can get it back up into the 230s, maybe even try to retest the high up here. Union Pacific, railroad company, transportation, people need stuff. Let's see, Intel, this was a trade that I posted about this week. This was a spike trade that we had on Thursday, yesterday, And so far, so good. It's a little late into the trend. Here's the daily. We basically, Intel has just been getting absolutely hammered all year long as the rest of tech, but has started to sort of rebound. And I say it's kind of late because I would have, like anyone, wanted to buy it on one of these pullbacks. So getting it on this later pullback means that I'm going to try to take some profit off here at the top, reduce my risk so that I can try to hold the position longer. I don't want it to come all the way back to here, even though it might. But that was something I had to jump on Thursday. I also had a conversation with a really much smarter friend of mine that started rattling off all these letters and numbers of their chips they're putting out. Whether those chips make them profit, I don't know. But he is super bullish on Intel. And I just happen to see a technical setup. So we shall see. And I think really, Intel is another company that's not going to go away. And let me go ahead and commit the fallacy. How much lower can it go? No, I'm not saying that. But it's a lot better to be buying Intel now than it would have been, frankly, 2 years ago. Do I think Theranos is a good investment? Do they even trade still? I have a very nuanced view on Theranos. I think that, what's her name? What's the girl's name? She was a victim of her own success. I don't know how fictitious that was. Oh, well, I take everything seriously, man. I take everything seriously. I think they shot a little too far, and they kind of hoped that no one would catch them on what they were doing before they could actually keep growing stuff. I know, but I take everything seriously, man. When I make jokes and people laugh, it's because I'm speaking seriously. I don't mean to be funny. If I try to tell a joke, it falls completely flat. So that's why I'm not a comedian. It's just a trader. All right. What else do I want to look at? Dollar yen. Dollar, guys. So I mentioned this last week, and I'll mention it again. The DXY, we had this huge run in the dollar. Who would have thought that one of the best performing asset classes of 2022 would be the US dollar? Considering how everyone told us, Ray Dalio among them, that cash was trash in 2021 because of inflation, right? Well, relative to all of the currencies, if you had dollars in your bank account, you can now buy more. You can buy more stock. You can buy more crypto with your US dollars. Holding dollars, ironically or unironically, was one of the best investments you could make for 2022. But like all things that go up, it must come down. And I noticed this about 2 weeks ago when price on the DXY was starting to kind of dabble, even though interest rates were going up. This is all based on interest rates. Little quirk of Forex knowledge, foreign exchange trading knowledge. Interest rates are what drive the prices of currencies relative to each other. A higher interest rate currency is going to increase in value versus a lower interest rate currency because it's harder to borrow the higher interest rate currency. That's just the fundamentals of Forex that everyone's forgotten because no one's traded Forex in a decade because everyone's interest rates have been zero and there's been no room for trends. Now that has changed. And so as interest rates were rising, so too did the value of the dollar relative to other currencies, namely the euro dollar, which is inverse because it's euro/dollar. So euro went down in value while the dollar went up in value. That's why you have this trend. And then with the yen, it's a little more clear because the dollar was going up and the yen was going down because they have not been raising their interest rates. That's entirely what's going on here. But everything is trying to be forward-looking. And then as this, I have this box set up here because I drew this from a live stream a little while ago. But as this was starting to kind of hesitate, making lower highs and lower lows, I was like, you know what? The market's starting to price in the potential end of rate hikes. That's what the market's pricing in. Jerome Powell didn't call me and tell me that. I'm just telling you what I see in the price action. And it's no surprise to me that we got, boom, a move down, even though there's not really been any kind of confirmation that interest rate hikes are going to stop. But you can already see it in instruments like the dollar yen. Had a little blowout top, a spike, if you will, on October the 21st, pull back to a 50% level, and then that has set up to go down. If you have a Forex account, be watching the dollar crosses for a pullback. I mean, I've got it marked off right here. I would ideally, over the next weeks, months, because Forex takes a long time, probably see the dollar start to pull back to a 50% level. So 127 on the euro. Euro dollar, where would this be? Let's draw it out. I haven't done that yet. So one parity was a big psychological level that got overshot. Let's do the weekly. $1, where the euro was worth $1. Big overshoot right here. I wonder if we see a spike on the monthly. There's a close below. There's 2 bars. Well, that's a confirmed close. That didn't tell us much. But at this point now, you could probably start to see the euro dollar start to pull back a little bit. Trend's already started. The trend has already started. So be careful, but be watching this if you can. Let's see, what else is today? That's about it. That is about all I have for you guys to look at. VIX really quickly, just kind of hanging out. As long as VIX is over 20, the day trading bonanza of futures should be good, but that is starting to decrease. And yeah, the Santa Claus rally statistically is coming up. So be watching, guys. Be watching and trade wisely. So thank you all for joining me this Friday. I hope you have a great weekend. Have a great Thanksgiving. Try to spend it with people that you love. And be thankful that we live in such a wealthy country and economy where obesity is a bigger problem than famine. So take care.